Hello and welcome again to another edition of Analyst Insights. We hope you had a fantastic week and we are here again just to talk about all things investing, markets, and economics. So I'm joined again by my colleague Rufaro. Welcome, Rufaro.
Thanks for having me, Ranga.
Yes, so we have got a lot of issues to discuss this week. I would suggest that we start off with issues that are directly linked to the markets. So, one of the stories that we heard this week is one linked to the Zimbabwe Stock Exchange and the efforts that they are making to try and bring back PPC and Old Mutual on the market for them to start trading again in one form or another. It's been a long time. Obviously, there are no sort of tentative dates, but what would be your reaction to those kind of news? Do you think you are anyway close? And what do you see actually happening from that front?
Look, I think it's a positive development that the ZSC remains engaged in trying to bring back Old Mutual and PPC. What happened in terms of their suspension and effectively delisting from the ZSC is sad for our capital markets. It was done on a false premise. There was an Old Mutual implied rate which was linked to what was happening on the power market. I think there was, so it was kind of a knee-jerk reaction by the exchange control authorities in terms of associating what was happening on the power market to trading on the ZSC. And the idea was to create the Victoria Falls Stock Exchange and list the dual-listed counters. But of course, the manner in which it was done, there was no prior consultation with the issuers, Old Mutual and PPC, and they were obviously not keen to move across to the Victoria Falls Stock Exchange on the basis that they had been, quote-unquote, behaving badly and fueling activities on the power market. So with that context, the fact that we are now re-engaged in having a conversation with Old Mutual and PPC and trying to bring them back to the market, I think that's a positive development. I think our capital markets will be richer if we have these two dual-listed companies on the ZSE. And the fact that they are listed in bigger, more sophisticated capital markets would actually be a feather in the cap of the ZSE to say that the quality of our local base is such that companies that are held to higher standards by bigger, more liquid markets like the Johannesburg Stock Exchange are also quite comfortable being listed on our exchange. So I'm cautiously optimistic that they will succeed in bringing back these counters and other counters as well that are dual listed. I mean, it doesn't make sense, for example, that Zimbabwe's biggest platinum mine, Zimplats, is listed in Australia, but is not listed on any any Zimbabwean base. It kind of makes a mockery of of our local markets. So I think this is a positive step, and hopefully we'll see more of this sort of thing happen.
And if you were to be given an option, where would you want them to be listed on? The Victoria Falls Exchange or the Zimbabwe Stock Exchange, given the current differences which are there, and the fact that maybe for you, one of the reasons for having a dual listed counter is for the local institutions to be able to participate. So do you see better participation on the ZSE or on the Victoria Falls Exchange?
So I don't think of it as an either or. I actually think that there's nothing stopping counters from being listed on both the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange. Okay. So, so that those investors who are local, who do not have access to foreign currency, who want to participate in a counter in local currency, they have the opportunity to do so on the Zimbabwe Stock Exchange. And then, to the extent that they're exporters or investors who prefer to invest in US dollars, they're able to do so on the VFX. So those counters that are already listed on the Victoria Falls Stock Exchange, your Seedco, Caledonia, and Padenga, there's nothing stopping them from having listings as well on the ZSC that is in dollar denominated and that where the same shares are trading in this is normal in global capital markets. You have, like multinational companies, you'll find that they will be listed in the US, in US dollars, in the UK in pounds, in Germany in euros, and on the Nikkei in Japan in yen. And, so 24 hours, somewhere in the world, that counter is trading. So I think that for us, just having it Zim dollar and US dollar on our local exchanges, I think that should also be normal.
And talking about the ZSE, this week you also saw some corporate changes or some structural changes at the exchange, with Robert Mbayoa being appointed the head of the Victoria Falls Exchange, and Enimo Taruinga being appointed to head the Zimbabwe Stock Exchange, the local boss. And then I've got Tinashe Mapara heading the depository. What kind of signals are you getting from that kind of those changes by the exchange in terms of the future of the capital markets in this country? Are those changes positive, and what could be the signals to the market about where the exchange wants to take itself in the next few years?
I think I look at it as a positive. It speaks to the desire to drive growth in each of those areas, whether it's the Victoria Falls Stock Exchange, the ZSE, and the depository to introduce new products. So putting each under the making one person responsible for each of those initiatives, it makes it more likely to achieve the outcomes that they're looking for. So I look at it as a positive development in capital markets. I think the ZSC has made a lot of progress over the last 10, 15 years, and this is a positive step in its future.
Yeah, so on that note, so us here at Analyst Insights, we want to congratulate Enimo Taruinga, Robert Mbayoa, and Tinashe Mapara for the recent appointments, and we believe that the capital markets are going to benefit from those appointments. And maybe let's jump on to corporate actions on our market. There are quite a number of transactions that actually took place last year, but maybe let's just dwell on the ones that are still happening or that are still current. One of them obviously is the Lafarge one, where they are holding company Holcim is looking to sell the Zim asset, the local business Lafarge Zimbabwe, amongst other African businesses that are slated for a transaction there. And we are hearing stories of a Chinese suitor and others that are putting their bids for that asset. What will be your reaction to that transaction vis-a-vis, the general business environment in the country, and the involvement of international brands in our economy?
So I think the exit of Lafarge is different from the exodus of foreign investors that we've seen over the last 2 years on the Zimbabwe Stock Exchange. I think this is not anything to do with Zimbabwe's macroeconomic environment or the circumstances of Lafarge Zimbabwe. I think it's a strategic change of direction out of Lafarge, in France, where they are changing their structure and they're offloading a whole bunch of their African businesses. So that's that's a decision that was made in France that is not a function of events in Zimbabwe. So we shouldn't read anything into that disposal from a Zimbabwean perspective, one way or the other. I think what's positive is that you have interest from other international investors. So whatever...
Yeah, and locals. I saw something in the press where some local pressure group were saying, no, this one should be given to us, to the indigenous people. So maybe the way it's being framed is it should be given to. But I think from where you're sitting, say it's a transaction, it's available to the highest bidder.
Absolutely. So it's an asset that was owned by Lafarge, or that is currently owned by Lafarge, and they're looking to offload. And I think that in a free market, anybody who's good for it should be allowed to put their bid in, and the highest bidder should win. I think this idea that it should be given to anybody would be a net negative for our markets, because it signals to investors that assets can be expropriated and disposed of, for no value to them. So I think, what we would like to see happen there is a open market sale to the highest bidder.
Yeah, and in particular, obviously, the cement industry is very important in terms of it being able to support infrastructure development. Our neighbors in Zambia have got huge investments in cement. The likes of Dangote Cement are there, and also a number of Chinese cement manufacturers. And that's one of the reasons why they've got surplus supply in terms of cement. And every now and then here we've got some shortages. So I totally agree with you that it'll be good if this asset is to be sold, that the transaction is consummated with a player who has got a long-term vision to try and grow the industry and make sure that the supply of the product is assured. Maybe talking of another transaction, I think CBZ has been in the news with these things, with these transactions over the past 18 months, if not 24. So the recent one is the acquisition of the 31% stake in FML, and also the merger that's going to take place between the bank and the building society. So when you're looking at all these transactions that are taking place at CBZ, do you think they are they going to add value to the economy and also to our capital markets? Do we need a big player? Do we need small players? What kind of structure works better for Zimbabwe? So when you are looking at those kind of transactions, what comes into your mind when you're looking at all the transactions that have happened and are said to be happening around CBZ?
So I think with reference to the CBZ transaction, if you look at their shareholding, what you'll find between CBZ and FML is that the major shareholder in both was effectively the government, and so it made sense to consolidate and benefit from synergies. And I think if you're looking at it from CBZ's perspective, strategically, they do have insurance businesses across the board, from life to short-term, but they are a small player there, whereas FML is a much bigger player in the insurance space. And in the marketplace, there is another significant banking and insurance business, which is Old Mutual Zimbabwe. They own CABS, which is one of the biggest banks in the country, and they have the biggest insurance operation in the country. And they operate as a insurance and financial services block, and it works well for them. So I think that the CBZ FML transaction is inspired by the Old Mutual structure, and I think they hope to benefit from it the same way, and compete more effectively with Old Mutual. The CBZ Bank, CBZ Building Society merger, I don't, they've got this identical shareholders. I don't, I can understand the motivation for it from the synergies and cost-cutting perspective, but I think that I don't know whether it's well advised, because building societies benefit from certain tax incentives, which were put in place to encourage investment in housing and the growth of mortgage books, which is why if you look at another financial services group, FBC Holdings, they have not merged their building society and their bank, because they want to always be able to benefit from those incentives in the building society, and they consolidate those benefits at group level. So I don't know what the calculus is within the CBZ group. Perhaps they find that the synergies and cost savings from the merger outweigh the tax benefits of the building society structure. So it remains to be seen post merger whether that they were correct in that assessment.
Yeah, interesting sentiment. So maybe one of the argument that is being put across is this measure is trying to create a big financial institution that has got scale for it to be able to go out there and raise the capital on the international markets for the purposes of investing into our economy. So it's interesting to see how that one really works out, and whether there's going to be value created in creating this big animal, or maybe we start having some diseconomies of scale setting in. A very sort of unsettling development that also came out is, as we are looking at the farming season, has been the runaway prices of fertilizer. And this is something that we have seen every season, that whenever we are getting at the peak of the farming season, you start hearing that the price of fertilizer has gone up. What needs to be done in the long term, given that this is a very critical product for the farming, and also the place at which farming is actually is in terms of even in terms of policy or government intentions. What needs to be done as a long-term solution to deal with these recurring cases of high fertilizer costs and high input cost of one sort of another?
So I think it's when you talk about price increases in the Zimbabwean context, it's important to ask the question: are those increases in US dollars or in Zim dollars? And if it is just
in this case, these are in US dollars, yeah.
So what is driving that? Because if it's in US dollars, then these are real increases. What are they structural changes in the supply chain that have necessitated these cost increases? Because we know that globally there is high US dollar inflation. It closed the year at 7%, and there are various supply chain challenges. The cost of shipping has gone up significantly. The cost of crude oil, and therefore fuel and transportation, has gone up significantly.
So in this case, I think it's more supply chain bottlenecks. So there's a shortage of the product, and obviously someone is getting an opportunity to get a higher price for it. It's just because there isn't. The local producers are not able to produce enough, and even the exports are not able to meet demand. So that tends to be the reason.
So unfortunately, I think we're a price taker in terms of the global markets, to the extent that we're importing any of these things. And so we are at the mercy of the vagaries of the supply chain challenges that are affecting global markets. So it looks like, unfortunately, this year we're going to have to suffer some higher input costs. And perhaps next year or the year after that, as these supply kinks are sorted out, we will see a reversion to more reasonable pricing.
Maybe in conclusion, what do you make of the market at $7.2 billion US dollars market cap?
So I think it's overvalued at these levels. I don't think there are enough earnings, and I don't think the outlook, the growth outlook, is sufficient to justify that valuation. I think it simply speaks to Zim dollars trying to ring fence themselves against devaluation and inflation. But I hope I'm wrong, and the companies surprise me this year and justify these high valuations.
Thanks so much, Rufaro, for sharing your views with us. And to our viewers, this is what we had for this week. And Rufaro here thinks that the market is overvalued at the moment. Would love to hear from you. What do you think in terms of the valuation of our markets? Where do you think the local market should be in terms of its valuation? And what's your outlook in terms of that as well? Thank you so much for viewing, and please remember to subscribe to our YouTube channel, like our Facebook page, and let's have conversations and feedback from you on this program and the ones that we do on ZFN. Otherwise, bye bye for now.